The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. Welcome to today's presentation on advanced order flow trading made easy. My name is Michael Valtos. I'm the founder and trader at orderflows.com. Now, just get a few things out of the way. Yes, this session will be recorded, and I do have a special treat for you guys at the end if you stick around. So, there's still a few people coming on. It just turned 10 o'clock. So, what I'll be talking about today in this training is a few things, right? Order flow has been around for a long time, and unfortunately, a lot of people still have a basic knowledge of order flow. They haven't really advanced their education, so to speak, their trading education with order flow. And, I find it to be shocking and a shame at the same time because there's so much information for a trader to get out of the order flow that they could use in their trading. So today, what you're going to discover is how to use order flow in different market conditions. I'm going to share with you a couple of advanced order flow trade setups, and I'm going to explain them to you. So whether you're using software that I developed or software from another party, hopefully you can take what you learned today and apply it to the markets using your existing order flow software. Personally, I'm a bit biased. I think mine is superior to a lot of the other software out there, but I want you to come away with something that you can use in your trading no matter what. All right. And I'm going to talk about the tools that you can use to make order flow trading easier, right? I mean, that's the whole point of trading is, to make it easy to see what's happening in the market. It's not about throwing indicator or squiggly lines or trend lines or this and that on a screen and finding something that works usually after the fact. You want to know what's happening right now, and that's what order flow helps you to see in the markets, right? So I want to show you how to leverage the information that's generated by the market, right? What's actually trading right now in the market. So you're always trading in the same direction as the market, right? It sounds simple, but a lot of people keep fighting the market, right? They're trying to buy on a market that keeps dropping, or they keep trying to get short on a market that's rallying, right? Like today in the S&Ps, right? We were rallying this morning after the cash open, a nice strong rally. And, anybody that was trying to get short on that is, left holding the bag. So what makes order flow different than, other forms of technical analysis? Well, you got to realize order flow is not the latest, greatest fad in trading. It's been around for well over 100 years. One of the greatest books on trading, that is referenced by a lot of very successful traders as being very influential on their trader development is Reminiscence of a Stock Operator, right? But you got to remember that takes place in the early 1900s, right? That's 100 years ago. And he was an order flow trader, right? Now, granted, in those days, they didn't have, the computer technology that we have today. Everything came through on a ticker tape. But, that was order flow. At that time, that was what was considered order flow. Now, with the advent of computers, especially personal computers, we're able to take that information and expand on it, right? And, that's really what order flow is about. And this training today is for serious traders that want to understand what's actually happening in the market. Now, like I said, I got a special treat for you guys. If you stick around until the end, I'm going to show you how to get this book that I wrote called Trading Order Flow. It's a 150-page book that I wrote after I left JP Morgan. I've spent 20 years, as a professional institutional side trader. Okay. And this is sort of, I started writing this book because I wanted to, give back to the trading world, a lot of what I learned because, it's hard nowadays for people to get involved, on a trading desk, right? It's very difficult, right? You have to go to a certain school, you got to get a certain degree, and sometimes you got to know the right people. Whereas before, you could just go down to the exchange floor, ask around for a job, and by the end of the day, hopefully, you would usually have one, right? People came from all different backgrounds. Now, it's there's only a finite amount of jobs, and there's so many people competing for them that you're really better off learning how to trade yourself. The barrier to entry for opening an account is much lower than it was, say, 20 years ago, right? Commissions are very low relative to 20 years ago. Now people are complaining about spending $5 a round trip, in the futures, whereas In the 90s, if you were paying $20 a round trip, that was considered very cheap already. So, the conditions have gone up and gone down. It's gone down as far as opening an account and learning how to trade and becoming a trader for yourself, as opposed to getting a job on a trading desk. The barrier has gone way up and it's very difficult. So, in that book that I wrote, Trading Order Flow, I explained, how to read the order flow. It's and how professional traders think, right? The big institutional traders think, because at the end of the day, that's who you're really competing against. You're not competing against some other retail traders. You're really competing against the big boys, the guys with the deep pockets. So hopefully, that book will give you some insights into, how the institutional traders trade. Now, what makes order flow again so special is it gets you as close to the market as possible, right? So you can see what's really happening in the market. And, people think, well, I'll just look at a chart and that's going to give me, it's going to tell me what's going on. No, it's just going to tell you where price traded. It's not going to tell you how the trading was. Was it aggressive? Was it passive? Was there heavy volume? Was there light volume? Right? What the market's really doing, right? So order flow allows you to gauge the tendency a market will continue in a direction. And that's important because as a market starts moving in a direction, you want to know, is that move strong or is it getting weaker, right? New trading activity, which is the volume, is what's going to keep the market moving in a direction. If that volume starts getting lighter, chances are that move's not going to be sustained and you're going to get ready for a correction. And, thirdly, you're going to have better, more complete information than 99% of the traders out there who are only looking at the open, high, low, close. And, some may look at volume, once in a while, but your real advantage is going to be by looking at information that other traders are not paying attention to. So for those that are new to one of my presentations, just a brief background on who I am. I'm not trying to make this, about me or anything, but understand where I come from, right? I'm not somebody that, just picked up a course on trading and taught myself how to trade. Now I'm teaching you. No, I started on the CME floor back in the early 90s, right, with Dean Witter Reynolds as a runner, literally at the bottom, right? You can't start any lower than that in that industry. It's funny because, the CME, the runners, when you start out, right, you got a yellow jacket, right? Members obviously got the colorful jackets, but, the story was that, there was a woman who, was on the board of directors and said, those runners, they have to wear a yellow jacket because they're peons, right? And if you understand, peons, yellow pea. But anyway, that's how low it was, right? But, I worked my way up, right? I left the trading floor when electronic trading started taking off in the early 90s with Dean Witter Reynolds still on their upstairs trading desk. Okay. After that, I joined EDF Man, the big English trading company, right? They've been around since the 1700s, right? Trade all forms of soft commodities. Right? After that, I joined Commerzbank in Chicago. I spent like 4 years there. I was their Eurex trader. I was their licensed Eurex trader. At that time, to trade Eurex in the U.S., there was only certain companies that could do it. Commerzbank was one of a handful at that time in the late 90s. And it was great because I had a license to trade Eurex. Right? It was, in a sense, a membership at the exchange through Commerzbank, but it wasn't considered that. But I was the one that had the license, so nobody else at Commerzbank technically was allowed to except me. They had to trade through me if they wanted to trade. Then after Commerzbank, after 9/11, I took some time off, 6 months. I sort of traveled around the world. Then I joined Cargill in Chicago. I joined their futures trading desk. Cargill, the big American commodity trading company, versus EDF Man, which is the English one. And I spent 4 years there also. And they sent me out to Singapore when the exchange was closing their trading floor. The SGX exchange, the old Cymex exchange, wanted to go fully electronic. It was, at that time, it was basically one of the last few exchanges in the world that was all had the open outcry that wanted to go fully electronic. So I went out there and I set up their trading desk. After that, again, I was in Asia. I'm in my early 30s. I'm like, hey, you know what? After my contract was up, my 1 year, I said, I'll take some time off, travel around Asia, because it was, early 2000s. It was a nice time. And JP Morgan needed somebody that understood futures in Singapore beyond fixed income, right? So with my experience in commodities and elsewhere, I joined JP Morgan. I was vice president of futures trading at JP Morgan in Singapore. I spent 8 years there. Okay. So, and that's a trading desk, right? I'm not sitting in an office looking at numbers and spreadsheets and things like that. No, I'm there on the um, on the native systems trading away. Okay, for 8 years, I'd come in at 5 in the morning, or sorry, 6 in the morning when Globex reopened at 5 p.m. Chicago time, and I would be there until about 5 p.m. in the afternoon. After getting burned out for doing that for 8 years, 12 hours a day, I said, I'm going to kill myself. I'm going to have a heart attack. So I left and I started trading for myself. And then a few years later, I started writing my book, and then from my book became the Orderflows company, right? And it's a software. It runs on NinjaTrader 8, and we're at our third version of it, right? And the reason I created this software is because I was trading for myself. I was using Orderflow, but the software that was out there was just very basic, very limited, right? And there's still people selling the same software that they were selling, in 2013, 2015, with very little improvements. Maybe they put an extra drawing tool or something on it, but there's certain ways I use the order flow, right? Certain things I'm always looking for. I said, why can't I just take what I'm looking for, have the software show it to me, right? So I don't have to sit here and try and decide, is this or is this not, right? That's the power of computers. And the reason I talk about this is because, the charts you see in this presentation are generated from the software, right? And this is what I talk about when I say make trading easier, right? Don't make it harder that you got to learn all this stuff. Let the software show it to you, okay? And again, once you see how easy and quickly you can apply order flow to your trading, you can become a better trader, right? Imagine, like having, a professional trader sitting next to you telling you, oh, this is what's happening in the market. That's what's happening in the market. All right. So, just before we dive in here, a brief disclaimer, this, trading involves risk. Don't trade with money you can't afford to lose, basically. We all know that. So when you ever look at a bar chart, do you ever really stop and think where that information comes from, right? I mean, yeah, we could see, well, I can see the market selling off, but all you're looking at is the open, high, low, close. Well, yeah, that's just basic information. It comes from the time and sales, right? Every time there's a trade that goes through, it's time stamped with a time and, the price and the quantity, right? And now, people like to look at the depth of the market, the trading dome, the price ladder, so they can see where the bids are, where the offers are. Okay, but the problem with time and sales, the problem with the depth of market, the price ladder, is they move super fast. And it's hard for a lot of traders, especially traders new to trying to understand order flow, to make heads or tails of what's happening. If you've ever been to, watch Formula One or watch, the Blue Angels flying in the sky, trying to take a picture of a car going 200 miles an hour, or, a jet flying in the sky, trying to take a picture, it's very difficult, right? So trying to look at time and sales and trying to look at the price ladder sometimes is very difficult because it's moving so fast, right? You want to take that information and put it into a format that's easy to read. So the difference between time and sales in a bar chart, remember, time and sales, shows the price that traded, it shows the time, it shows the volume. Bar chart just shows the price that traded, right? At least time and sales shows the price traded and the volume, right? And more importantly, it shows the side of the market it traded on, whether it traded on the bid or traded on the offer. All right. And that's very important information that any trader wants to know. Back in the days when there was a trading floor and a big local started buying, everybody would follow him, or, a Goldman Sachs would come in with a big order to sell, 2,000 E-minis, right? The locals would follow him, right? Because why? It's because they know that volume is affecting the market. And that's where order flow comes in. If you're looking at a normal bar chart, you're not seeing that information. So, order flow, right? A normal bar chart, how most traders view the market is on a normal bar chart. They see, well, the price opened up at 39.5, traded down to 38.75, and we closed at 39.25. So it's a red candle, down a tick. But order flow traders see the exact same bar and they see, okay, well, we opened at 39.5, we traded down, volume is in the middle, the point of control for the bar is more or less in the middle, we traded down to 8.75, but very little traded. Then we started coming back up and there was aggressive buying, right? There's so much more information you could take away from the same bar from the same information. And the interesting thing is that people sort of overlook is you could get this information from your normal level one. You don't need level two like you would if you're looking at the depth of market price ladder, right? Level one information gives it to you because you're getting the time and sales. It's whether you choose to look at it on a normal bar chart or on an order flow footprint chart. So again, understand where the chart comes from, right? It's easy to just look at a chart and, after the fact and said, oh yeah, that would have been a good buy here or there, well after the fact. But as it's trading, that's when you want to make those decisions, right? So from the time and sales, from the DOM, the depth of market, the information you see on your bar chart comes from what's traded in the market, right? From what you see in that time and sales. But again, they leave out the most important piece of information, the volume that's traded on the bid, the volume that's traded on the offer. So this is yesterday, right? In the E-minis, we had sold off and we're just sort of going sideways, right? And again, people are wondering, are we going to come down and make a new low, or are we going to start rallying from here, right? I mean, in a sideways market, you don't really want to be trading that unless there's something actionable for you, right? And people like to draw, have moving averages, have VWAP, but everything is flat at this time in terms of VWAP, in terms of moving averages or whatever. A lot of your indicators are just showing up as, it's flatlining, going across here. Now, order flow traders have that advantage because they are seeing what's actually trading in the market, right? The volume's trading on the bid, the volume's traded on the offer. Is there net aggressive buying or is there net aggressive selling, right? And again, this footprint here on this chart is this right here. And again, it's easy after the market rallies from 41.18.5 all the way up to 23.5 to say, yeah, that would have been a good buy. But when you're looking at it, right, when you're looking at a chart, right, this is the period before it rallied, right? You can't make heads or tails out of that. Like, yeah, I don't know, is it going to rally? You got big wicks to the upside, big wicks to the downside. It's really, a market that's not really going anywhere. But by looking at the order flow, you start to see that information that's telling you the direction the market's going in, right? And again, if you're just looking at that bar chart after the fact, it's easy, right? But you don't trade after the fact. You got to trade now in real time, right? So take it a step further, right? When I say, let the computer do the work for you, let the software highlight areas where there's instances in the order flow that's actionable, right? That's bullish or bearish, right? Show you where buyers are getting stronger or weaker, show you areas where the market is potentially reversing, and so much more. And you can see it in here, if you have software that highlights it to you. I mean, you could sort of pick it up yourself if you spend enough time looking at a chart. But yeah, honestly, I know a lot of people are impatient, right? That's the beauty of having software that's going to highlight it to you. You see these little green points of controls here and here. These are telling you there's bullish order flow in the market, right? And you see how the market rallies up from there, right? From these levels, right? So it's telling you there's some nice buying opportunity now, right? Rather than after the market makes that move up, right? Again, this is mini NASDAQ yesterday. Okay, what's going to happen next, right? We're selling off. We made a new low. Then we're just sort of drifting down sideways, right? You got a little doji bar here, a little doji bar here. You're trying to make heads or tails of, are we going to take out this low? We're only, a point and a half away from this low. Well, why can't we take it out? If just a little bit more selling comes in, could easily break that low. But if you're looking at an order flow chart, you could understand what's going on, right? You can see that, as we came back down to this low, even though you're getting a couple of inside bars here, the net buying, right, the deltas are nice positive deltas, right? You have very tight bars, but very strong buying going on in this little bar here, in this other bar right here, right? Then obviously this next bar, very big aggressive buying. As the bar gets stretched out, you got a lot of buying imbalances, which I'll talk about later. And the market rallies, it rallies about 30 points. So again, if you really want to make your trading easier, have software that takes the information from the time and sales, from the depth of market, and put it into an easy to read format, right? And as you can see here, right, you're seeing, again, the green point of control, which is telling you is bullish, right? You're seeing this value area, which I'll talk about later, as being blue, which is also very bullish, right? So you're seeing a lot of things, and if you know how to understand what's happening in the delta, it's also very bullish. So you're at the practically at the low of the day, and a lot of bullish information is coming into the market, right? So that is actionable information, right? You could take a very low risk trade. You see this bar come in. Oh, I got a lot of bullish things happening in this bar. Yeah, I'll get long. I could have a tight stop. You know what a tight stop is considered now in the Nasdaq. But if we're wrong, you're going to know right away if we're wrong. If all this bullish information, all this bullish order flow is wrong, the market's going to correct and start trading into it, right? And get to the other side. You know you're wrong. You don't have to have a stop below the low of the day. You can have your stop, below sort of this value of this bar. Because if we come back in, we take out these bullish things in the order flow, then it's not bullish, right? Okay, the market just popped in some bullish information, but then the market reversed. So you can have a very tight stop rather than trying to buy, way up here with a stop way down here. Right? You can have a tight stop. Imagine trading Nasdaq with relatively tight stops. It's unheard of, right? And this is a 30-second chart. But again, this is that same chart. This is that low right here, right? We went up from, the 30, 35 area all the way up to 90, 95, right? It almost, a straight up. Yeah, they'll pull back here, but then continue back up. But again, imagine you just caught this move here from 40 up to 70, right? You're happy. So again, a bar chart just shows the price that traded, but that's just the starting point. An order flow chart shows the price traded and the volume traded, but more importantly, the volume traded on the bid and the volume traded on the offer. So again, knowing what trades on the bid and the offer is going to help you because you're going to understand the direction of the market, right? Through the aggression. So what that means is, the markets trade in a two-way auction, right? There's a bid, which is the buyers, and there's an offer, which are the sellers. Now, these are passive traders. They're passive buyers. They're passive sellers. For a trade to happen, a trader needs to either buy the offer or a trader needs to sell the bid. So they have to cross that bid offer line. And when a trader does that, he is considered the aggressor, right? And you call them aggressive traders, right? And that's the information that you're going to see in the footprint in here, like why this number is blue as opposed to black. If it's black inside the bar, that's just your normal order flow. But when you see 8 traded against 61, it's telling you had aggressive buying, right? So that's one of the more important things that you're going to be looking for, is where the aggressive buying is coming and at what price levels. So again, back in the old days, I think the NYSE is the only one that still has a trading floor. Back when the CME had a floor, Board of Trade had a floor, people, exchange memberships were selling for close to $1 million because that the traders on the floor had access to that information. They could see the buying and the selling that was going on. They were right there in the pit, right? So they could see the big orders coming into the market and being able to trade off that, as opposed to someone sitting in an office just looking at price on the screen. That's one of the reasons why exchange memberships were so much, is they had access to information that other people just didn't, right? Now, time and sales, right? It gives you a lot of information. You probably never really wondered why it's different colors, but there's a reason, right? If it is, well, in this case, it's orange, but you can change the colors to whatever, blue and red. I have it oranges and green, but all this trading that's orange color is an aggressive seller came in and sold these prices for this quantity, right? Now, the exchange separates it by order size, so there's a lot of one lots and stuff. You see, then the market, you can see, went from 36, 38, 86 and a half offer to 50 to bid, because there's trading going on, right? At this time here, it's currently trading 86 and a quarter at 86 and a half. Okay, so the problem is, if you watch time and sales during the day in real time, it moves super fast. You're not going to be able to by the time you notice something, it's gone, right? The opportunity is gone. But you can take that information, you can put it in a footprint chart, so you could make heads or tails, so you can see, oh, you know what, I had imbalances, selling imbalances going on here. I had aggressive selling happening here, right? But if you're looking on here, it's just gone. It's, yeah, all red, all red, all red, etc. But when you take that and you put it on a footprint chart, it gives you a chance to understand it, right? And that's really the whole point of looking at a footprint chart. Now, once you have a footprint chart, you got to realize there's what is sort of the basic information you're going to look at, right? Well, there's three. There's delta, there's point of control, and there's imbalances. Delta is the difference between the aggressive buying and aggressive selling in the bar, all right? And that's important. I'll talk about that in a minute. Point of control is the price level in the bar with the most volume, okay? And that's important, right? All these are important. That's why I'm talking about them. Imbalances are when aggressive buyers outnumber aggressive sellers by 4-1 or more, and vice versa when aggressive sellers outnumber aggressive buyers by 4-1. Now, again, that 4-1 is sort of the industry standard, if there was an industry standard, but it's what most traders use. And again, you could adjust it if you want to use 3-1, if you want to use 10-1, right? Different people, different strokes for different folks in terms of imbalances. So delta will normally appear at the bottom of a chart. I mean, some software like to put it up above and below the bar because they don't want to take your eye off the bar. I guess they think you can't walk and chew gum at the same time. But you can see generally as the market is selling off, delta in each bar is negative because aggressive sellers are in control. Not always, but generally. Then as markets rally, as markets are going up, as prices going up, you have generally aggressive buyers, right? Because you have buyers in control of the market. Now, point of control, every bar has a point of control, just as every bar has an imbalance. As every bar has a delta. Now, the delta the point of control rather, is the price level in the bar with the most volume, period. What was traded on the bid, what was traded on the offer at that price, not in the two-way auction, just at that price. Okay, so you see every bar, I have some highlighted here. Now, the thing is, every bar has a point of control, but not every bar's point of control matters, right? I was showing you those examples earlier where the market rallied based off of where the point of control appeared in a bar, because in our studies, we have found that depending on the type of bar, what's happening in the bar relative to the previous bars, where the point of control comes in, it could be signaling something bullish or bearish happening in the market. Okay, and for example, right, if you have point of control, if you have a lot of the volume towards the bottom of the bar and we can't really trade below it, then the market rallies. Well, you've got support. Just as if you had, a point of control up near the high of the bar and we can't really get past it, a lot of volume is going through there. It could be telling you there's resistance, right? That's just sort of a basic framework, but you start to understand what's happening in the market based on the delta, based on the point of control, based on imbalances. Now, imbalances, there's buying imbalances and there's selling imbalances, right? So you're going to look for buying imbalances on moves up, selling imbalances on moves down. And in the footprint, it's going to be blue for buying imbalance or red for selling imbalance. And it's a good sign, for knowing the direction of the market. Sometimes, markets sort of going sideways, but then all of a sudden you see a bar come in with a lot of buying imbalances. Well, that's good. It's telling you there's a lot of aggressive buying happening in the bar. Then you pair it together with the delta, and it gives you a good clue as to where the market is going. So just really briefly, buying imbalances, selling imbalances, okay? We'll talk about buying imbalances first, right? They're the blue numbers in the footprint. So you can see 6 against 30, 7 against 35, 15 against 80, 2 against 15, 6 against 27. These are imbalances because the difference is greater than 4-1. It's 2 against 15 is that's greater than 4-1. 15 against 80, it's greater than 4-1, right? But it's happening on the offer side, so you have aggressive buyers buying the offer, right? And you can see as the markets move up, you see a lot of bars with buying imbalances, right? Now there's a thing, a lot of order flow traders understand imbalances, and they understand the next step, which is a stacked imbalance, right? Where you have 3 or more imbalances stacked neatly, nice pretty on top of each other. 1, 2, 3, 4, 5, 6. In this case, all stacked neatly on top of each other. It could be a stop that got triggered. Could be somebody that swept through the market. Okay, but the important thing to take away is there's a lot of aggressive buying happening in a short burst. Okay, so selling imbalances is sort of the opposite, right? It's red colors in the footprint. So 4 against 18, 0 against 27, 5 against 27, 3 against 19, 6 against 42. In the two-way auction, when the market was bid and offered, there was more aggressive selling to the bid than aggressive buying from the offer. That's a selling imbalance, right? And as you can see, as the markets move down, you see the selling imbalances. Now you also have stacked selling imbalances, right? Just as you have stacked buying imbalances, and that's when you have 3 or more imbalances stacked neatly on top of each other. 1, 2, 3 kicks off a nice selling imbalance, which people use these as support as resistance level in the near term. Okay, so you can see here you got stacked selling imbalance, market traded back up in here. You're looking for that selling to reappear, and if the selling imbalance holds, the stacked selling imbalance holds, you look for the market to sell off, which it did. So having all that order flow information is nice, right? But you got to know how to take it and use it, right? I mean, you can see how the market traded, but you want to know how you could use that information to take trades, right? That's the whole point of order flow. Now, you got to understand there's different market conditions, right? It's not always markets go up, right? As a lot of people think this past year, everything goes up, stocks never go down, but they don't really think about these market conditions. They think of terms of trending markets or consolidating markets. Okay, so in other words, a flow-driven market is a trending market. A rotating market is a consolidating market, and depending on the conditions that you're trading in, it's going to determine how you trade, right? Remember, you can't trade a trending market the same way you trade a consolidating market because it takes 2 different trading styles, right? Because they're 2 different market conditions. Just as you're not going to drive the same way when it's snowing as opposed to when it's hot and dry and sunny outside, right? So you got to understand that. And sometimes people don't. They just think, well, there's a signal, I got to take it, right? You always got to be trading in context of the market. So what's the difference between a flow-driven market and a rotating market? Well, in a rotating market, it's just the usual suspects, right? The retail traders, and people are just happy to facilitate trade. The market's not moving because, one, there's probably no driver in the market to move price in a direction. The big players are absent basically, and so it's just left up to all the little people, the usual suspects, so to speak, to trade. Now, in a flow-driven market, it's completely different, right? It's the big institutional traders that are trading, right? They're the ones that are moving the market. I mean, you still have the usual suspects, right? The everybody else trading, but the big traders are active in a flow-driven market, okay? And after all, what causes a market to go up or down, right? It's the aggressive traders, right? If everyone's just happy to sit on a bid and sit on the offer, the market's not going to move. You need somebody to say, what, I got money, I think the market's going to move, I'm going to buy 1,000 contracts, right? They're just going to buy it with impunity, right? Buy the offer, buy the next offer, buy the next offer. That's the aggressive trader, right? That's how markets move. But again, how can you see the aggressive trading on a bar chart? You can't, right? It appears on a time and sales, but again, who wants to look at time and sales, right? The easiest way to look for imbalances is, the easiest way to look for a flow-driven market is in imbalances and delta in the footprint chart. Now, in a normal rotating market, the order flow is normal. You don't see a whole heck of a lot of imbalances or anything really special volume-wise, right? But in a flow-driven market, you see the clues that the big traders are active and moving the market. So, just for example, this is normal market activity, right? We're in a tight range. You see both buying and selling imbalances. People say, well, you said if in a flow-driven market, you see buying imbalances, you see selling imbalances. Yeah, you see them on one side. Here it's mixed, right? You see a bar with selling imbalances and a bar with buying imbalances, the same bar, right? It's just telling you it's a quiet market, right? Now, if you're seeing long bars, right? When you start seeing long bars, you got to understand volatility is picking up. As to a market like this is low volatility. Really, what is volatility is the market searching for price, right? Searching for volume. That's why you have bars being stretched out. Again, normal market activity, right? It's just going sideways. A whole lot of nothing going on. Small deltas, pretty evenly matched. 8, 7. Tell me it's traded 2,000 contracts, and the net difference between buyers and sellers is 8, right? There's nothing going on, right? But that's just normal market activity. The market exists to facilitate trade, to match buyers with sellers. Now, a flow-driven market, you see things completely different. You see big delta numbers in a direction, right? You see, minus 700, minus 2,000, minus 1,400, minus 800. You're seeing a lot of imbalances in a bar. Here you're seeing selling imbalances, selling imbalances, selling imbalances, selling imbalances, right? You're not seeing a whole heck of a lot of buying imbalances. Sure, there's a couple, mixed in, but mostly what you're seeing is aggressive selling, right? Here's the market was rallying here, right? This is this morning, right? In the crude, right? We made that low at 86, but you're seeing, relatively small deltas, and you're seeing the aggressive buying come in here, multiple buying imbalances, right? You're seeing things in the order flow here that's giving you bullish signs, right? With the points of controls with the value area, which I'll talk about these later, right? Because these are very important aspects of order flow, right? Crude oil yesterday, right? Big sell off, right? I mean, it's just people selling here with impunity, right? Minus 600, right? You're seeing a lot of selling imbalances, right? You're seeing stack selling imbalances, minus 600, minus 1,400 in the delta, right? It's not really pausing. It's just big traders coming in, selling it, right? They want to be short, or if they have supply, they just want to get rid of it, right? That's a difference between a flow-driven market and a normal market, right? Is the type of trading that's happening. And the easiest way to tell is obviously imbalances, and secondly is deltas. What are deltas doing, right? You got a bar here, so, and look at these, right? Internal delta numbers, max and min deltas, just really quick, because it's interesting. It's very tiny. 0, 17, 7, 0, 0. At no point was aggressive buying, these bars with 0 max delta, ever in control. Never. All right, so let's talk about some setups here. Okay, this is the interesting part of where you could start putting these things together. One of my favorite movies was Karate Kid. Right, I love the new Cobra Kai series. Sweep the leg, Johnny, because it's it's a saying that we used to use on the trading desk when the feature was introduced to us back in the 90s on Comex. Right, they had a sweep function. So when you're trading the metals and energies, you can sweep the market up through or down through certain prices. So a market sweep occurs when a trader takes out several price levels in one trade. So this is the market, right? It's currently 41.25 bid, 41.25 and a quarter offer, right? But I'm a big buyer. I think the market's going to go up. I've got 500 to buy, 1,000 to buy. I look at the depth of the market. Okay, well, there's not much on the offer. Shit, I got to buy 500. So, I could try and piece it in, but, my buying might trigger off other buying. Other people will see, oh, there's a buyer trying to finesse the market, and they jump in. So what do? Right? And I've done this many, many times, throughout my career is, okay, I know I got 500 to buy, but there's only about 300 up to 26. I'll just put in my order 41.26 to buy 300. Okay, it's going to leave me 200 left over, but I'm happy to buy that because I know that my buying is probably going to trigger off people that are watching the dome thinking, oh, price just skipped, price jumped. I got to start buying the 6 1/4s, the 6 1/2s, because now, I've bought 300 up to 26. And if I put the whole size in, buy 500 up to 26, the market is now 26 bid, right? It's 26 bid at 26 1/4. I cleared out all these offers here, right? And then the bids will start filling in down here. Okay, so a sell sweep is the opposite, right? So, if it's 25 1/4, and I've got 1,000 to sell, I could look at the book. I could see, gosh, I can only sell about 700 down to 24. That's going to leave me with 300. Okay, I'll sell it down to 24. Okay, so now the market is, oh, I got this backwards. It's 24 offer, and 23 3/4 bid, right? Because I've turned it offered here, so it's now 3 3/4 bid offered at 4. I wrote this backwards, but and then because I'm still working my balance there, I swept it through. So what are some of the signs in the order flow is there's not much counter trade that happens, right? Because as I'm sweeping, it's going through in one trade very fast. And I mean, there's still trade going on. So, you might see 1 or 2 contracts trade on the offer that's sort of in flight as my sweep is going through. So for a sweep to effectively move the market, right? Again, sweep is going to more effectively move a market that's got less liquidity, meaning less bids or offers that you're trying to sweep through. Now, if someone is working an iceberg here, maybe someone's got 1,000 to sell at 5.5 and is only showing 50, and I try to buy 500 up to 26, I'll be filled on everything up to 50, and it's still going to be now 25 1/4 at 5.5 because that iceberg is still there. That I don't see what the iceberg is until I trade against it, basically. Now, again, when a sweep runs into an iceberg, you don't know where the icebergs are because the exchanges don't put that information out unless you trade against it. Then you could see, the ton number, the ticket order number. There's a certain designation for icebergs. But again, if you're watching a DOM, you can sort of pick it. Now, on a normal candlestick chart, you can't see a sweep going on, right? You don't know when there's big aggressive buying. You say, well, there's a big bar here. It must be strong aggressive buying. Yeah, but you don't see where the sweep is coming in, right? On a footprint chart, if you know what to look for, yes, you can see it, right? And this is really, in my opinion, one of the beauty things of order flow is being able to see the sweeping activity that other traders can't, right? And again, if you were to sweep it up to 26.5, basically you're going from this depth of market to this, right? Before it was 25 1/4. Now it's gone 6 bid at 6 1/4. Okay, then the volumes just automatically fill in. The algos will fill it in for you. But if you're looking at the footprint and you know what to look for, you can see, yeah, there's a sweep here. Yes, there was a sweep here. Yes, there was a sweep here. Okay, but again, let the software analyze it for you. You could go drive yourself crazy trying to figure this stuff out. Is this a sweep? Is this not a sweep? Have software do it for you, right? And that's, my software, the Orderflows Trader software, we have a thing called sweep detector. So we can see this activity when it's happening, as opposed to trading on a hunch. Yeah, I think there was a sweep there, but I'm not sure. We've sort of defined the rules for it, right? And you can even adjust the rules. On a normal chart, this is a 5-minute chart, okay? You can't tell. You can see, well, yeah, there was some strong selling here, right? Obviously, there's big aggressive selling because you got the big down bar. Okay, on a footprint chart, right? You can see, well, yeah, I have some imbalances here, so obviously that's bearish, right? Okay, in fact, that's a stacked selling imbalance, right? Most traders, order flow traders, look at stacked selling imbalances and they trade around them, which is good. But if you're looking at sweeps, you can see there was a sweep that happened up here much earlier than this big down candle, right? Where would you rather be short? Up here at 95 or down here at 80, right? That's an extra 15 ticks that you can get as a trader, right? And then the market sells off, starts working its way back up. We got a bullish sweep right here. I mean, we still have some sweeps down here as we're going down, but you should have already been short from well up here. But now you're seeing something bullish in the order flow, and the market starts rallying, right? From 60 all the way up to 80. Now, that's sweeps. Now, the next thing I want to talk about is order flow sequencing, okay? And this is one of the new features that we put in the software last year. And what it is, it's when there's resting liquidity is stacked and taken out. So what does stacked mean? Well, each subsequent bid on the downside is bigger than the bid above it. So you can see here like 96, 121, 153, 200, 241, 289, right? Or every subsequent offer is bigger, right? You see 21, 75, 89, 113, but then you have a gap. It just goes back down to 62. So you got an area of very little liquidity, then 153, 199. So I'd consider this stacked, these 4 prices stacked, but then stack starts up again, right? So the book is not always stacked like that, right? But when it is, right, is watching how it trades when it trades. Okay, so show you right on the footprint chart, you'd have to look at how it traded, right? And it's hard to look at a footprint chart and trying to look and sort of get the sequence in your head, right? But there's sequencing, right? And you're not going to look at sequencing on both the bid and the offer side all the time. There's you're going to look at it in certain spots, but trying to look at it could make you blind. Trying to make all this stuff. It's going to give you a lot of extra work. Let the order flow do it for you. You can see sequencing, bullish sequencing, bullish sequencing. This is the cash open here. Bullish sequencing, swing high, bearish sequencing at the swing high. Market sells off. I mean, look at right before the next big bar down, right? More bearish sequencing, market keeps going down. That's a 5-minute chart in the E-minis, right? Let software show it to you, right? Here you can see sequencing. You can adjust the cluster size and how you want it to show up on the chart. This is crude oil, bullish sequencing as the market's going up, bearish sequencing, market starts going down, bullish sequencing, market starts going back up. Mini NASDAQ, 20 range chart, bearish sequencing, boom, market sells off, you start seeing the bullish sequencing. The market is eating through subsequent higher offer volumes, right? That's important to know as a trader, that the volumes are heavy, solid, but the market is just eating right through it, right, as it's making its move back up. Again, 20 range chart. I don't put the arrows here, but you can see sequencing, bullish, bullish sequencing, bullish sequencing, bearish sequencing, followed by bullish, 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 bullish. Hits the swing high, no sequencing on the swing high, but the bar right after it, bearish sequencing as we drop from the mid 60s all the way down to the mid 40s. Again, this is Apple, right? People always ask about, well, I trade stocks. What can I do for stocks? Okay, well, this is Apple stock, right? Right here, right off the low of the day, yesterday, bullish sequencing, right? Market rallied, went up, made a new high. Right up here, 153.53, started going sideways. Okay, what's going to happen? We're going sideways. We've got two inside bars. But in the second inside bar, you see bearish sequencing. Okay, at this point, I'm thinking, well, maybe this market's got some capacity to go down. Next bar lower, then the next bar, another inside bar, but with bearish sequencing. And what happens? Boom, finally the market reacted to it. This is JP Morgan, my favorite. Right off the low of the day yesterday, 2 o'clock, straight up. That's a nice 45-degree line, straight up. Bullish sequencing off the low. Okay. Now, the thing with the order flows, I get this question a lot, and I sort of want to touch it. Right. This is Tesla. This is a 30-second chart, for example. If you're going to use order flow on stocks, there really have to be stocks that trade like JP Morgan or Apple. Stocks that have a lot of volume at every price increment. On stocks that sort of jump around, it's not going to be very effective, right? Honestly, it's hard to make heads or tails of some of this stuff because every price is going to be an imbalance because it's against zero because the price is too erratic and you don't have volume at every single price increment, right? Like you do at, say, JP Morgan or you do at Apple. Okay, so just bear that in mind. When you're using order flow, right? Because you're analyzing volume, so there needs to be volume at price, right? If it skips around a lot, it's just not going to be very effective. Now, the tools to make order flow trading easier, right? So, I've talked about the Orderflows Trader at the beginning because I want you to see how easy it is to read order flow in the market, right? It's going to help you see who's in control of the market, to be in sync with the market, understand why the market stops and reverses, and many other things. But you should always be asking, what more can the software do for you, right? And that's why I created the Orderflows Trader software. When I first released it in 2015, there was like four indicators in there, right? We still have them. We've expanded them over the years as we are able to. When NinjaTrader 8 came out, there was, it really opened up like a Pandora's toolbox, so to speak, for us on what we can do without overwhelming the system. And, so we can see where market exhaustion exists, where market weakness is, support and resistance based on what's trading right now, not based on pivot levels or trend lines. No, it's based on the actual volumes that are going through. Sweeping activity, which I just showed you. Market imbalance. I talked about imbalances, but I'm going to show you something else with imbalances, which is amazing. um, Show you value, right? The value areas in a bar, where the aggressive trading is coming in and much more. So market exhaustion, right? Now, again, this was one of the original tools in 2015 that, a lot of traders say it really changed their trading, and they developed trading plans right around it, is we're showing you in a bar, right? You see these green lines here. It's telling you there's basically market exhaustion, right, at the lows here, based on the order flow. Okay. And generally, as markets move up, you're going to see price exhaustion coming in, on the moves up, right? Meaning there's price exhaustion below this bar, right? People aren't interested in trading below this price level, and that's how moves are over, right? When nobody's interested to sell anymore. That's how moves down are over, when there's no more sellers. Just as moves higher are over when there's no more buyers. When people aren't interested in buying anymore, the market's just going to naturally sell off, right? I don't think of it as selling off, but you have no more buyers, right? So there's just nothing to move the market higher anymore. That was an E-mini 1-minute chart, but this work is fascinating, right? 10 years. 10 years trade, very massive volumes. 10 years is probably one of the most liquid contracts in terms of liquidity in the market, because it trades thousands and thousands at a price level before it moves. But if you can see market exhaustion, right, it's telling you buyers aren't interested above this price level. Okay. What can you do with that as a trader? Well, you can get short, right? Or sellers aren't interested below this level. What can you do? You could get long. And again, the beauty of 10 years, I don't recommend it unless you have a lot of money, but since it's such a liquid contract, right, you could trade big size in that. And if you could catch a move in it, I know guys that trade hundreds, 100 lots in the 10 years, because they're only looking for 2 ticks, 3 ticks. And that's where a tool like knowing there's market exhaustion coming in on such a liquid contract, right, that you can get your 2 ticks, 3 ticks, 3 ticks, 3 ticks consistently. I mean, there's going to be times like this where it started going up, then it came back down, right, and then made the move. But, as a trader, that's what trading is about, right? Trading around these levels. Now, market weakness is another piece of information that a trader can have, and it shows up in the order flow. Now, there's 2 types of market weakness. When people think of market weakness, they don't think in terms of bullish and bearish, okay? But bearish market weakness occurs when the market has been moving higher but can't sustain the move higher. The buying is weakening, okay? Whereas on bullish market weakness, right? Sounds, you don't think of a bullish market as having weakness, but what that means is a market's been going lower and lower, but finally the selling just tapers off. There's no more selling. The selling is exhausted. The selling weakened, okay? And you see this day in, day out in all the markets. So bullish market weakness, market's been going down, 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 but the sellers are getting less and less until the buyers take control of the market. The selling is weakening. You can watch the delta, right? You can see what's happening in the delta, because delta is going to be strong, but then not so strong, then not so strong. Then it's going to flip and turn the other direction. Bearish market weakness, the market's been going up, 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 but the buying is weakening until there's no more strong buyers. The market's not going to keep going up forever unless you have buyers. But if the buyers are dropping off, if everyone is bought, who's going to move the market higher? Nobody. Again, watch the delta. Is aggressive buying getting stronger or weaker as the market is still going up? So here's an example, right? Market's it got a swing high here, just sort of going sideways. But if you're watching the delta, it's kind of mixed. 355, 137, 400, 414, 313, 27. Obviously, it turns negative here, 300. This orange arrow is telling you there's market weakness happening in the market, right? Because where's your buyers? Were you just up here at your swing high? The low of the day was here, rally up, swing high. but there's just no more buying. It's just gotten weaker. It's gone, it's gone negative, then it's positive, smaller positive, turns negative, boom, sells off into new lows. This is the bullish market weakness, right? You're selling off, right? You're selling off. Generally, you have nice strong deltas. 58, then just -3, gotten weak. 75, okay, that's strong, but then it gets weaker again. 42, 39, you got a bullish prominent point of control here, and the market starts rallying, right? This is your signal that there's bullish market weakness, right? And that's what the software does. It shows you these things. Now, I talked about imbalances earlier because, one of my favorite trading methods is trading multiple imbalances. And it's really like this, right? It's picking out these little things, when everything looks the same, but picking out these little instances in the market. Now, I talked about stacked imbalances, right? You have a stacked imbalance here, but the market went nowhere. Okay. Then we came off, made a new low, and then we rallied off this low. This is yesterday, that 10.5 low, right? We rallied back up. You have a bar with 1, 2, 3, 4, 5, 6 imbalances. Now there's no stacked imbalance like you have up here because they're spread out in the bar. And what the software will do, it will highlight the bar. It'll put this magenta box, you could change it, around the bar that has multiple buying imbalances, a green bar that has multiple buying imbalances, or a red bar that has multiple selling imbalances, right? So as you're going down into the lows, yeah, that's nice to see. Selling multiple selling imbalances, that's what you expect to see, right? You're making new lows. You expect to see the aggressive sellers come in, but you're at the low of the day. Now you have aggressive buyers coming in. And if you're just looking for stacked imbalances, you don't notice it. Not at all, because they're not stacked. You got 6 imbalances, but they're spread out in the bar. And the market rallied from that bar with multiple imbalances. Again, the software is highlighting it to me. We're going up and making new highs, right? In the E-minis here, right? You got on the way up, you take out the high, you got stacked buying imbalance. That's what you expect to see. You expect to see buying imbalances going up into the highs, but you hit that new high, 78.5. And then what do you see? Aggressive selling, multiple selling imbalances. 1, 2, 3, 4 selling imbalances. They're not stacked. So if you're looking for stacked imbalances, you're not even noticing what's happening in this bar. You have 4 imbalances, and the market put in a nice little drop. Okay, so that's sort of the power of looking at multiple imbalances and having software that's going to highlight to you where multiple imbalances are. Now, value area, right? If you ever studied market profile, you understand what value area is, right? And there's a value area high, there's a value area low, which is different than the high of the bar and the low of the bar. It's where 70% of the volume trades for the day, right? On the market profile, looking at the value areas. But you can take it a step further. You could look at it on a bar by bar basis. Okay, so you can see every bar still has its point of control. You still got your normal footprint. You still got your buying imbalances, selling imbalances. But now there's a bigger rectangle. That's the value area. Okay, every bar is going to have a value area. But again, not every value area is going to matter. And where it gets interesting is you can see how value is developing sideways, right? And then it gaps between this bar and this bar. Value develops sideways. It gaps lower, right? There's a whole new form of analysis you can make. But what we found over the years in our using it is there are certain value areas that matter. Like I said, every bar is going to have a value area, but there's certain ones that are going to be bullish or bearish. And you can see here, it's colored red if it's bearish, right? If it's blue, it would be bullish, right? So you can see bearish value area. What happens? The market sells off, right? But every bar has a value area. It's how you connect the dots. In this case, we're letting the software, based on our method of order flow analysis, on how a value area is bullish or bearish, highlight it to us, right? I mean, there's still other forms of analysis we can do with the value areas, but having that as a quick heads up, saying, oh, what, this one's bearish, okay? I got to look for continuation, just as this is NASDAQ. A bullish value area, this might be a little hard to see on your screen, but this is blue, right? Whereas the other ones are gray, right? Right as the market is getting ready to rally about 20 points, right? You're sort of going sideways, and it puts in a nice bullish value area, right? And again, a value area is just the area where 70% of the volume. Now you could adjust it. People like to use 68. Um, Other people use different numbers. They like to fine tune it, but 70 is one standard deviation more or less, and that's important. So when you have a bullish value area, generally you're looking for the market to rally, right? Just as if you have a bearish one. Okay, and really that's a lot of the power of the order flow comes from taking the information that you're seeing and feeding it into the computer and have the computer say, you know what, yeah, this is bullish, this is bearish based on a set criteria, right? So you don't have to sit here scratching your head. Oh, is that bullish? Is that bearish? Well, at a glance, right? Now you can take it a step further and add in your other forms of analysis, whether you're using technical analysis or order flow. There's so much more you could build off of it, right? So you can see, right? There's just so much more information available from the order flow than traders realized, right? Unfortunately, there's not enough time to discuss it today. I've been going on for about an hour. So remember, don't just trade the market blindly. Trade in context of the market at all times, right? You want to be buying by the dips, so to speak, sell the rallies. But if the order flow tells you there's something bearish coming into the market after the market rallies, or something bullish coming into the market after the market has sold off, right? That's what context is all about. Now remember, right, a plain footprint chart already has a lot of information. People just trade a footprint chart like this naked all day long, right? And that's fine. You can do that. But what I'm saying is, why don't you let software help you show you market weakness, support and resistance levels, sweeping activity, market imbalances, value, aggressive trading, and all the other benefits of using order flow. I mean, to me, it just makes perfect sense. Why try to swim upstream? Swim with the current of the market. And again, order flow is really about understanding what the aggressive traders are doing in the market. Take this information on the time and sales, put it into your brain, but not in such a way that you can't understand it. Process that information. Don't make trading more difficult than it needs to be. Right? Again, people like to complicate things. I'm saying keep it as simple as possible. So, in my opinion, there's always two ways to do things, right? There's the easy way, there's the hard way. I prefer the easy way. I've been down the hard way in the past, and it's difficult, right? You're going to struggle. I prefer the path of least resistance. I let the computer show me what's happening right now in the market, right? So this past hour, hopefully you agree it's been time well spent. But again, I can't cover everything in a 60-minute training session. Every week I do a live group training for users of the software where I go through interesting things in the order flow, how to use the software, settings. I talk about how you could use this setting for a particular market. Let you ask questions, but I can't do it like on a session like today. Okay, but I've got a special offer for you, so you can get everything you need to know about order flow. And if you act fast, I'll give you a very, very special deal. Now, when I say special deal, because I know price is going to go up soon. Okay, I've been saying that. I've been a little bit reluctant to raise it. My programmer suggested that we raise it, and quite a few users are saying, your software, you should raise the price. But I like to keep software affordable to traders because order flow is there. It's for everybody to use. So you're gonna be thrilled, right? I got the Orderflows Trader for NinjaTrader 8. Now it works on NinjaTrader 8 because I'm a futures guy. I trade futures, and it just makes sense. It's an easy platform for most people to use, and that's what I've been using when I first had the software programmed. Okay, now it's the volume footprint chart with 17 pre-programmed tools. I talked about a few today. I talked about market sweeps. I talked about market weakness. I talked about multiple imbalances, but there's more, right? There's a total of 17 programmed into the software. And to set it up is very easy. You don't need any templates or spending hours. You just set it up. The defaults that are set is set for the E-mini 1-minute chart. Normally I sell it for $8.99 on my website, but you're not going to pay that today. Having the software, right? Really, the way I describe it, it's like having me sit next to you on the desk, right? And taking what I see and basically telling you, this is bullish, this is bearish. It takes my knowledge of trading order flow that I learned, 20 years as a professional trader, and put it into the computer, right? But I realized having software is one thing. You still need to know how to use it. So I just say, here's your software, go on your way, figure it out, which a lot of people do, right? And they've got these like, yeah, here's the software that's going to solve all your problems. And they give you like a 3-page PDF on how to use it, and you're sitting there, I just spent all this money for this, for what? I provide a lot of education, right? Because I believe you don't just need software; you need to know how to use it, right? There's sometimes I buy software and it's like, okay, but then I'm like trying to figure out how to use it, and then it's difficult, right? And I get frustrated. I don't want you to be frustrated, so I give you access to my order flow trading course, which I sell on my website. You can go there. It's $297 if you want to just buy that trading course. But I'm gonna give it to you for free if you take advantage of the special offer. Now, 4 or 5 years ago, for about 2 years, I ran an inner circle, sort of advanced order flow trading for traders. And what I'm going to give you access to is the videos of that inner circle. There's 56 videos inside there. Again, the inner circle doesn't exist anymore, but the videos still do. So you're going to get access to that. And what it is, it's advanced order flow analysis, ways to read the order flow. Each video is about 30 to 50 minutes. So it's not overwhelming. But again, it's fascinating. Parts of order flow that you never probably thought of looking at. Normally, if you want access to this video series, it's $500. It's $497. Okay, but I'm going to give you that for free also, because I really want you to understand order flow, not just have software, but I really want you to understand how to trade the order flow. So you start adding it all up, that's almost $1,700. It's $1,693. But again, it's one thing to learn from a course. It's one thing to learn from videos and books. It takes discipline and commitment, right? And again, it's hard for people, especially if you got a family or if you're working a job, some cases 2 jobs. It's difficult. And that's why I do live training sessions for people. I do them every Tuesday night at 7 p.m. I've been doing them since 2018. And that's where you could come in. You could ask your questions if you have any questions, or you just sit back and chill and just watch and learn, right? And there's over 116 episodes already in there. And it's free for users. You could, if you can't attend, you could watch the recording, okay? But again, you could ask questions there. That's why I do it, is because I want to have an area where you could come in and interact with me rather than trying to chase me down over email. If you got a question that I maybe haven't addressed, you want me to explain something, I'll explain it here for you. You just come in and ask your question. Simple, right? Now, there's people that want to charge you extra for courses on how to use their software. For what? You just spent money on their software. They should be helping you rather than you go to them asking for help, right? That's why I do this, and that's why I don't charge you for it. Because again, I want you to get up to speed. Again, other people will charge you up to $200 a month for training on their software that you just bought. Well, the training should come with the software. So yeah, the software, the trading course, the Inner Circle video series, the live training, it adds up, right? But again, you're not going to pay close to $2,000 for this, right? I got a special deal. It's $749 today, right? Again, it is going up. I've been saying that for the last month. I've been really hesitant to move the price up because my other people involved are saying you gotta raise the price, but I really want to keep it low to keep people, get them into trading. All right. And again, the beauty is it's not a monthly recurring payment, right? You pay $749, that's it for life, right? And you get access to the courses for life. Now, you will have to pay data fees and whatever NinjaTrader fees. Now, my software will run on the free version, it'll run on the paid version. Okay, so if you're not using NinjaTrader, you could get the free version connected to a data source, and you're good to go. You can enter your orders through your other trader's front end. Now, if you're using a paid version of NinjaTrader, if you have the full license, there is an order flow tool on there, but it's very basic, right? People say, "Why do I got to buy your software? NinjaTrader has order flow on it." Well, it has the footprint on it. It doesn't tell you what's happening in the order flow. It just shows you the order flow. So there's a big difference. Okay. So again, other people have been saying about my software is it's very helpful because now they can clearly see now what's happening in the market. Someone else says, if you really want to trade properly and understand what on earth is happening in any markets, order flow is the path forward in Mike's experience, and explanation makes it click. So what you do is you go to orderflows.com/oft3, takes you to this page, you scroll down, right? You see now there's videos you could watch, there's charts with explanations you could read, but to really get started, you just scroll down, find this button, click here to buy now, get lifetime access to Orderflows Trader 3.0, right? That's what you do to get started, okay? Now, it takes you to PayPal. PayPal processes it. I don't get your credit card information. I don't want your credit card information. It's all handled through PayPal, right? Most people are familiar with PayPal. And again, it's just a one-time payment of $7.49. Again, think about it, right? Where were you last year when shutdowns hit, right? Versus where you are now. We all had a lot of plans, things we wanted to accomplish. Like, oh, I'm going to become a better this or that and become a better trader. Are you now? $7.49 is not a big investment in your future, in your life. So you got several options, right? One, you can do nothing and stay right where you are right now, right? Which is what I was talking about, versus last year. But then next year, you could do nothing now. And next year, you could watch another one of my presentations and sort of be in the same spot that you are literally right now, going nowhere. Now, two, you could take the information I talked about today and try to apply it to your own trading. And, maybe you could have some success with it. And maybe you could have some success with it, but not understand that you're doing it wrong, okay? I mean, some people take it and they go away and they apply it correctly to their trading, but there's other people, sometimes they think they're doing it correctly, but they're not. They put the cart before the horse instead of after the horse, so to speak. Or number three, work with me, right? Put the ball in the back of the net, score the goal, so to speak, right? Take you step by step through the process. Skip that trial and error of trying to figure out order flow because I'm teaching it to you. And then you'll notice your trading improve, right? And hopefully your life will improve, right? You'll become a better trader. You're not going to be stressed so much. A lot of traders get stressed because they don't understand what's happening in the market, so they get stressed. They start to panic. Right? Don't let that be you. You got to figure out what motivates you in life. For me, it's freedom, right? Freedom to do what I want, when I want, with who I want, right? And last year, having that freedom, it's like, hey, what? We've been in the house since March, basically. I want to go somewhere. Okay, let's go to South Dakota. We'll go see Mount Rushmore, go to Crazy Horse, those places. Okay, let's go. When do you want to go? Well, let's go now, or next week rather. And that's how we did. We just piled everybody in the car and we drove, right? Why? Because I have that freedom, right? I'm not tied down to a boss or anything. Trading gives you that freedom to go where you want, when you want, or basically do nothing if you want. If I just want to sit out and vegetate for a couple of days, I can do that, right? The markets are going to be there tomorrow and the next day and the next year, hopefully, but definitely they'll be there tomorrow, right? They've been around since the 1800s. I think the Board of Trade has been around since 1863 or something like that. So it's well over 150 years. So chances are it's going to be there next year and the year after that and the year after that, right? So, trading is a long-term way to live, basically. Now I got a special, because Anna put together this presentation for you guys. I got a special bonus for you guys, right? I'm gonna give you access to this course, the Order Flow Playbook. Normally I sell this for $297. You can go to my website, buy it now if you want for $297. That's great. But I'm gonna give it to you for free when you get the software, right? So again, go to orderflows.com/oft3.html. But you got to get started, right? If you don't get up and take some action, nothing's going to change for you, right? And whether it goes for trading or anything in life, right? So what you're going to get, right? You're going to get the Orderflows Trader software, which is normally $8.99. You get the Orderflow Trading course, which is normally $297. The Orderflow Inner Circle video series, which is normally $497. The live weekly group training, you're going to be able to participate. The value for that, in my opinion, is priceless, right? And you get access to the Orderflow Playbook, right, which is normally $297. The Orderflow Playbook actually gives you 9 or 11 trading setups in addition to what I talked about today that you could use in your trading, right? But get all that for just a one-time payment. Again, it's a one-time. I'm not going to charge your credit card every month and then you can't cancel it, then you got to cancel your credit card, but somehow you're still getting charged. Yeah, I've been there. I've set up recurring payments for things, and then it's like I close the bank account, but then the bank's still chasing me down for money because somehow it's, even though the bank account is closed, they're still processing payments. It's bizarre. But again, I hate that, and I don't want you to go through that. That's why it's just a one-time payment. There's no other payments to me in the future. Just your data fees, which I don't get. That just goes to your data provider, and whatever NinjaTrader fees. Now, if you stuck around, and a bunch of you have, go to orderflows.com/book.html, right? It's going to take you to this page. Make sure you put the book.html, not just orderflows.com/book. It's got to be www.orderflows.com/book.html. Enter your name and email address and click submit, and it'll take you to the next page, which is the download, right? You can read it online. You can download it to your handphone, your iPhone, or whatever, your tablet, your computer, print it up. It's yours for free. So again, get started now. Go to orderflows.com/oft3.html, and that's going to take you to the page to get started. So again, I've put the information in the chat so you know where to go. The links are there in case you don't want to type it all in. There's the link for the book, http://www.orderflows.com/book.html, and the other one is orderflows.com/oft3.html. And the reason why it's called OFT3 is because this is our third upgrade. When you get my software, I don't charge you for upgrades. People that have bought my software in 2015, 2016, and are still using it, right? Because they know they get the upgrades for free. They don't need to keep paying more money. Some people want to keep charging you. Oh, well, you made some changes, so now we're going to charge you more. No, you bought it at this price 3 years ago. Even if it's more expensive now, you're still entitled to all the upgrades for free. So this is our third iteration. First one was just order flows, OFT. Second one in 2018 was OFT 2. This one is OFT 3. And we do it about every 2 years. So, we're already in the works and working with people on what they want to see in the next version of Orderflows Trader. So again, I don't want to keep you guys on too long. I've been going on for an hour and 15 minutes. So if you got any questions, just shoot me an email. It's mike@orderflows.com. And, I'll do my best to get back to you in a timely fashion. But, granted, I do get a lot of emails. But, if you got a legitimate question, I don't do free trials. It was abused before in the past. Unfortunately, we made a business decision not to do it. But again, we keep the value, we keep the price of our software relatively low and the value high, right? We offer a lot of tools and a lot of extra education that you're just not going to get elsewhere. Okay. And really that's the difference. So thanks everybody for attending. Thanks Anna for having me. And again, any questions, just shoot me an email. It's mike@orderflows.com. And have a great rest of the week, everybody. And hope to hear from you guys soon. Bye-bye.